Facebook reports on Wednesday. Nice day today. We talked about it last week. Facebook into earnings this Wednesday.
Okay, so that was Guy Adami from April the 21st. This is Bob Desmond, and welcome to the Contrarian Trader. I happen to be a big fan of Guy Adami. However, we differ on a couple of areas. One is he's pretty much a vocal supporter of high-frequency trader. I have a video on the homepage where he does battle with Leon Cooperman and Mark Cuban. I disagree with him on high-frequency trading and really the ethics of it. The second thing I disagree with Guy on is Facebook and buying it into earnings. I don't really believe in buying any stock into earnings because all stocks, according to William J. O'Neill, are speculative. I don't care how good the fundamentals are. This is a stock that's trading at a high valuation, and if it misses, you're going to see the stock take out the support level right here at 55.44. To promote the stock on TV into earnings, knowing that it's probably going to gap up the following day into a resistance level and to say buy ahead of earnings is a high-risk move. I don't agree with it. Where should you have gotten long of Facebook, and where would I have agreed with Guy if you wanted to have a good risk-to-reward entry point going into earnings? Not that I would even do it. Right here. Double bottom setup off of 55.44, rallied, pulled back, higher low at 55.88, off to the races. And then Guy supplied the rally on Tuesday morning. Now, when you take a look at the volume, though, volume was not that great. Volume has been very, very weak, even with the help of CNBC. You didn't see institutional buying into earnings on Wednesday. They're on the sidelines. Or those who are holding, they're hedged for a miss. Where I would have agreed with Guy is that this is a bullish setup. You did have a good day on Monday in terms of price performance, but volume performance was horrible. Now, if you would have said, sure, it's okay to enter the waters, but just use a hedge, buy an out of the money, put an option to prevent a dramatic loss, I would have agreed with that. However, he didn't say that, and that's where I take issue. Now, what I believe that he's looking at is the weekly chart and this breakout of a triangle formation. He does like charts, as do I, and he saw the breakout. But to predict that this breakout on a Monday is going to last through Friday is a little bit premature and hardly enough for me to take the risk to buy a stock as expensive as Facebook is into earnings and at resistance. I have to disagree, especially when there was a far better risk-to-reward entry point right down here. What you also need to take a look at is the price and volume action on the Dow Jones Industrial Average, the S&P 500, and the IWM. Beautiful, beautiful price action. You're looking at it, you're saying, wow, this market's going off to the races once again. But when you take a look at the volume action, you're seeing sequentially declining up volume. Compare the up volume in recent days to the down volume, which has been above average. Hardly the stuff that bull market breakouts are made of. Then, when you take a look at Tuesday the 22nd price action on the Dow Jones, big topping tail, a sign of resistance, where buyers back here and back here are now looking to get made whole. Also, IWC, the micro caps, which have really taken a beating of late, the high beta names. Not that Guy promoted these names, but what I'm pointing out is the weakness in the market, the weakness in this rally. The price action has been good, but the volume action has been very, very weak. We want to think about this prior to saying, okay, buy a high beta name and a very expensive name at that into earnings. These are all the factors that we need to take a look at prior to opening a trade. And what ticks me off about Guy, and the reason why I'm taking issue with him right now, is that he did not calculate this into go buy Facebook ahead of earnings. Overly simplistic and, frankly, not the best advice to be giving people. S&P 500, Similar to the Dow Jones Industrial Average in that it backed off the highs of the day on Tuesday. Volume is below average, although it did roll in higher than Monday's up volume. Now, if I were a guy and I were looking at the overall health of the market, I would have been taking a look at Monday's volume and saying, you know what? Caution flag is on the track. I don't know whether or not I would be buying a high beta, highly expensive name in advance of earnings. IWM, Russell 2000, another one, right into resistance, very light volume. This is not institutional buying, folks. This is all short covering. Same thing, S&P 500, short covering. Now, when would I buy Facebook? I would wait until after earnings. Let's get that out of the way. If it spikes higher, so be it. Does that mean it's not going to come back down, retest the 50-day moving average, or retest support? That's a possibility. Or when you take a look at the last earnings period, back here, the stock gapped up. If you had hoped for the stock to fill the gap, you would have had to have waited over 3 months. What you could have done in this situation is identified this topping action where this resistance line formed. And the day that it broke through and closed above that resistance level, you could have opened a position. After it had consolidated for over 3 days at that support level and then began its breakout of this consolidation phase, you could have added to that position. And you would have had a nice, healthy profit at a good risk-to-reward entry point. Then as you began your breakdown, you would have been stopped out of the trade. You would have pulled back, filled the gap that opened up from the last earnings period. Then you could have opened up your position 3 months later, but you would have profited from this upside move. And that's how I would have made the trade. Not buy into earnings. There's too much risk involved. And I'll be interested to see whether or not Facebook does in fact rally, or will it miss and begin a breakdown? Too much risk. I'm not predicting that it will. I'm certainly not saying to short the stock, but I'm certainly saying that you should not be buying the stock into earnings. Far too much risk. This is a stock that you want to take a wait and see approach. If you did not get in back here where there was proven support, as identified by back here being resistance, this point here being a pivot point, which was retested, held, this was your good risk to reward entry point. Not up here, not into earnings. So I think that it was a little bit premature for a guy to be giving out buy calls on Facebook. I think better strategies could have been exhausted prior to taking on this kind of risk. And that's it, folks. If you have any questions, shoot me an email, and I'll talk to you soon. Take care, folks.